one thinks to get involved in dividends, to build a really big dividend portfolio, to be successful in investing. Oh, I've got to save up all this money and make these big transactions. No, I've done it. I have done it. Yes, I've made some of the bigger transactions, like 10K at a time, but most of them are not like that. And it's the smaller ones that have really made the difference. And so that's empowering. And honestly, it was a little bit weird to see that. It was a little bit like, wow, how did I get so far when not any one single transaction did it? Hey everyone, this is Ian from ppcian.com. I am back with another video about dividend growth investing. So today's video is in response to one of your questions. This is a subscriber question, and it asked me, hey Ian, how much money do you like to invest at a time? You're averaging into these dividend growth stocks. How much do you like to buy at each time? Do you put in a lot of money? Do you save up a lot of money and make lump sum purchases? Or do you put in small amounts of money? Do you do anything in between? Ian, what do you do? So today's video, I'm going to respond to that question in great lengths. But before I do that, I want to share something with everyone out there. This is the holiday season right now. This is the season of giving. And any of us who are involved in dividend growth investing in the personal finance space, we're trying to improve our lives. We're trying to drive passive income and cash flow so that one day we can supplement our income or fully live off the cash flow that's coming in. I would say we've got it pretty good. We're in a position where we can save money. We're in a position where we're trying to automate income. We're in a position where we're trying to achieve financial freedom. And one of the reasons that I personally want to accomplish all of these goals is, one, it just gives me flexibility and freedom, but also I aspire to really give back in a big way. And I already try to do this in my day-to-day life. I even launched a website, lopuc.org, that tracks, it's a journal of our charity, of our contributions. And so I did that to hold myself and my family accountable so that we continue to raise the bar each and every year and give back to those organizations and those nonprofits that truly make differences in people's lives. And what I've also come to realize is this is the holiday season, and there is no better gift than the gift of giving. So this is the time that all of us in the dividend growth community, myself included, should be thinking not only about that next stock purchase, not only about averaging into stocks, which is good. I think that's a noble gift to give to someone else in your family or even yourself this holiday season, rather than buying things that one may not need. Why not enjoy the gift that keeps on giving literally forever, paying dividends forever? But what I'm also think is quite important that all of us consider is, if we're averaging into stocks, we're creating financial freedom for ourselves, we've got it pretty good, but not everyone does. And so I want to share today a few things I'm doing this holiday season, my family and I are doing this holiday season to give back. First one I'll talk about is this. Over here, these are some dog and pet toys that we purchased today. We've got a bunch of toys for dogs, like this one, and a bunch of cool stuff here. Bunch of cool stuff, like this one, the snake, fun toy. Got a blanket, got some other toys. The business that I work at this year, we're in the commercial real estate space. One of our commercial real estate facilities has a cause that's very near and dear to them. It's about animal rescue. And because we care so much about animal rescue, we partnered with a local nonprofit organization this year to help dogs, cats, rabbits in need who have been abandoned, who need new homes. We're getting them into new homes. We're getting them the toys and the support that they need. And that is such an amazing cause. It is such an amazing thing, because this holiday season, sometimes the animals go forgotten. Maybe we're thinking just about people, but you know what? There's those animals out there too that need our help. And so this is just something I did today. I went shopping with my family. Even my son helped in, and he helped us actually pick most of these out. And it's a fun family day and it's also a fun family lesson that, look, we need to give back. And you know, one of our very own commercial real estate properties, part of the business that I work at, is doing a lot of good this holiday season. And I don't want to just bring one item, although anything is appreciated. If one item was brought in, we love that. But I wanted to go big, and so we bought 8 items. So we were really excited to do that. And I know this is going to create a lot of hope and promise for those dogs in the greater Los Angeles area where that commercial real estate facility is located this holiday season. So this is another charity. I don't own any stock, by the way, in Wells Fargo, but I really want to give a positive remark here. Our local Wells Fargo branch, this is in the greater San Francisco Bay Area. They're part of what's called the Holiday Wish Drive from the, I think this is called the Family Giving Tree. I think that's what it was called. Let me see. Something like that. The Holiday Wish Drive, I believe it was part of the Giving Tree organization. And the reason I remember that is when I worked at a company a few years ago, we participated in this one. I love this one because the kids and the parents of the kids literally get to write in their specific wish. And so we're fulfilling 3 wishes this year, and 2 of them are done. 1, we're still waiting for it to come in the mail. The one that's coming in the mail is literally, it breaks my heart. The child this holiday season was wishing for sheets for his bed. And I saw that at Wells Fargo, and it really was a kind of turning point. I'm like, wow, I've got to do something here. And so I picked that one up, and I actually left Wells Fargo. I went down the street to get my Starbucks. By the way, I do own stock in Starbucks, full disclosure. But anyways, I was drinking my Starbucks, and I was like, wait, Ian, 1? Are you really going to stop at 1? No. Go back to Wells Fargo right now and get at least 2 more. And so I got 2 more. We're getting a little girl, her own Peppa Pig, and I don't know who the other one is, but I know one of them's Peppa. Oh, and George. George, I guess, is Peppa's brother. I should know that. As a parent, I should know that. And we got another little girl, her first blow dryer and some hair accessories. And so, again, these are the specific wishes from the kids themselves, probably through their parents. And all I'm saying here is, 1, Wells Fargo, way to go. I love how they're getting the community involved and making it easy for me to give back in the best possible way to the kids that need these things. And so, but 2, just as something for all of you out there worth noting, we're in dividends. We're doing pretty well. Let's find ways to give back. And sometimes the signals are small. It's like, maybe I wouldn't have done this if I wasn't in Wells Fargo and I wasn't waiting for the teller to complete my transaction. I just looked right over there and I'm like, wait, what's this? And it's like, oh my gosh, this boy for Christmas just wants some sheets for his bed. And then it was a signal to me. And what I'm saying for all of us out there, whether it's the holiday season or throughout the year, there are these signals, and they come. And it is so easy just to walk on by and forget these signals, to move on. Maybe it's someone on the street that needs your help. Maybe it's someone on the street that's representing a charity. Maybe it's this thing in Wells Fargo. Whatever it is, when these signals come up, I just want to challenge the dividend growth community to think about these signals and act. And sometimes I don't act. Sometimes I see the signal and I'm in such a rush that I move on. I always regret it later. I feel horrible later in the day. But I'm proud of myself this time to have taken notice of these signals to make a difference in my local community, in the Los Angeles community, making a great Bay Area with this, Los Angeles with this, and making just a difference in our society this holiday season. And everyone can do it. It doesn't take a lot. It doesn't take a lot. It just takes time. Takes caring, and it takes a little bit of money. So anyways, that's the backstory behind all of this. Just wanted to share that today because it's fun. It's the holiday season. It's a fun story, just a personal story about what's going on in my life right now. And I know I'm always talking about money here, so I want to talk about some other things as well. But let's jump into the question. And so the question is, Ian, how much money should I invest in dividend stocks at a time? Well, in answering this question, the first thing I did is I went back to my stock portfolio and I researched, what have I done? And recently, if you've been watching my videos, I've been averaging into Kimberly-Clark. I've made a few investments so far. I've been buying this one for years, since I think 2011. But recently I bought a few times, and each time I bought about $200 at a time. Why has that been the case? I think one time I counted up a bunch of change and I cashed that change in, loose change, and I invested in the company. I think the other 2 times what happened is, if you've been watching my channel for a while, I did make the decision to get out of peer-to-peer lending. So as I've been cashing out from my peer-to-peer lending account, $200 at a time, I've been reinvesting it back into stocks like Kimberly-Clark. And so my recent history are these micro-level transactions, 200 at a time, and kind of just works for me. I think one of the main reasons it works for me is I have this idea that I always like to be in the game. Look, my portfolio is pretty big right now. 200 in the scheme of things isn't going to make or break me. It's not going to change much, but it does psychologically. It keeps me in the game. And so that's kind of point number 1, is how much to invest. I like to just invest as soon as I have the money. I kind of get the money and I want to put it to work. And so I'll make these smaller transactions, and I think the fees that I paid on that were around 2.5% range, probably closer to 2.5%. It's about the max I'd want to pay on a fee, one-time fee to get into a stock. So if the fees were much higher than that, I'd save up more money before putting it in. But 2.5, I pay that back with the first year's dividend, and then it's all gravy from there. It gets me in the game. I think sometimes people overthink fees. I think it keeps them from taking action. And for me, I'd rather take action than worry about fees. That's kind of just a macro level of what's going on in my life right now. But anyways, I look back at my stock portfolio. I'm like, well, what have I done in the past? I think the biggest lump sum that I've ever done in a dividend stock is about $10,000 at a time. I've done some other another one in the 7,500 range, a bunch in the 4,000 and 5,000 at a time. So those are some of the bigger transactions I've done. But when I look at things, it's generally been like 1,000 at a time or less, and oftentimes much less. Oftentimes 200, 100, even 50 at a time. If I were to be in a program or a broker or a dividend plan that would allow me to invest like that without paying any fees at all, or if I do pay fees, minimal, that are containable, I made a lot of those smaller transactions. And the fact of the matter is I've got a reasonably good portfolio now. Does it cover all of my living expenses? No. Do I have a long way to go? Yes. Am I getting there? Yes. The fact of the matter is, it's amazing how far I've gotten with these smaller transactions. And the moral of the story today is, if one thinks to get involved in dividends, to build a really big dividend portfolio, to be successful in investing, oh, I've got to save up all this money and make these big transactions. No, I've done it. I have done it. Yes, I've made some of the bigger transactions, like 10K at a time, but most of them are not like that. And it's the smaller ones that have really made the difference. And so that's empowering. And honestly, it was a little bit weird to see that. It was a little bit like, wow, how did I get so far when not any one single transaction did it for me? And so that's just interesting. Something I will say is I have made larger transactions before, but not in dividends. There's certain investments I've done in angel investing, for example. And by the way, I only do angel investing because my portfolio has reached the scale where it makes sense to dabble in that a little to achieve really high returns that I can then take and reinvest in dividend stocks. But for most of my investing career, it wasn't like that. It wasn't the right time to invest in angel companies. And so I don't want to dwell on angel investing today. Maybe I'll do separate videos about that in the future. But the fact of the matter is, angel investing, you have to do that because the bar is higher to even get involved in these transactions. The minimums are pretty high, oftentimes as high as $50,000 at a time. I personally haven't had to invest that much at a time, because usually when I do an angel investment, it's more because I had friends and family of the people that started the company, and I add a lot, or I add a lot of value through sweat equity and being an advisor and helping the company, and so I'm able to waive the minimums and get in lower. But still, it's a big lump sum when I have taken these angel investments. But the fact of the matter is, with dividend investing, I don't have to do that. And part of the beauty is I don't have to do that. I can average in, I can dollar cost average, I can mitigate risk, I can keep in the game, I can keep the momentum. So why would I save up, say, 25K or 50K and then do it? You don't have to. Even right now, why would I save up $1,000? Don't have to. As soon as I've got 200, bam, I'm in Kimberly-Clark. I love that. That's something unique about dividend investing. It's a benefit of dividend investing, and so I take advantage. I enjoy the benefit of dividend investing, of averaging in smaller amounts, because it keeps me in the game. keeps things interesting, keeps me focused on the right thing. For me personally, if I have too much money piling up, I may want to spend it, and this helps me avoid the temptation to spend. So what else? I do think it depends on the size of the portfolio, though. I have a really large portfolio, and I just don't wait. But I'm just saying, hypothetically, for others out there, smaller portfolio in particular, if it were me, I just wouldn't wait. Larger portfolio, maybe I'd have more reason to wait. But even in my personal situation, I'm saying I don't wait. I just get the money to work for me. What else? We talked about this, but again, it's the mentality. It's that always in mentality. Maybe some people don't need that. If someone doesn't need to be constantly buying to keep them motivated and also just keep them in the game, maybe they could wait, save a little bit of money on commission. But again, for me, the psychology of it just so works out that I like to be always in the game, always buying dividend stocks. One other consideration worth mentioning is record keeping. The more transactions one makes in dividend growth investing, the more records there are to keep. Now, dividend growth investing is something that's going to take decades anyways. I'm marrying these stocks forever. And there's a lot of records that come over the years, whether I buy frequently or infrequently, because I'm reinvesting dividends, I'm always reinvesting. One day I'll live off the dividends, but right now I'm reinvesting the dividends to buy more stock. So my snowball builds. And the fact of the matter is I'm already keeping a lot of records, so if I have to keep a few more records because I'm buying more frequently, doesn't bother me. Some people out there, it may bother them, so it's a consideration worthy of making. Thank you so much for that question. I really appreciate it. I think it's a good question. I cannot answer for others' personal situations, but what I can say at a high level is dividend growth investing offers us all the opportunity to buy frequently, so why not take advantage of that? I think it's a good thing. I think postponing buy orders just to save up and minimize commission is not necessarily the way to go, at least in my opinion. If one does expect a really large market correction, maybe one is kind of half in, half out. They're saving cash, but they're also buying. And that's a conscious strategy. But really, the idea here is factoring market corrections out of the picture, saving money to buy stock. That's what this video is about. Thank you so much for the question. I love these questions. If you enjoyed the video today, please give it a thumbs up, a like, a comment, a subscription. It means the world to me. And just as a full disclosure, I don't own any stock in Wells Fargo. I do own stock in Starbucks. I'm long on Starbucks. And I do own stock in Kimberly-Clark. I'm long on Kimberly-Clark. So just wanted everyone to be aware of that. Also, as a disclaimer, I'm not a licensed investment advisor. Today's video is not investment advice. It is just for your fun and entertainment. If you are going to go out and invest money in the stock market, please do consult a licensed financial advisor first. So my name is Ian Lopuck. I'm from PPC Ian. Thank you so much for watching. It is the holiday season, so I just want to wish everyone all of the best. All of the best this holiday season. Also in the new year, I want everyone to have their best and most prosperous new year ever, whether it's financially or whether it's some other way, or maybe it's everything. And I also just want everyone to know, don't lose sight of the others out there who need our help. This is the holiday season. Let's make some of that magic happen out there. The dividends put us in a fortunate position to help. Let's do it. No matter how small, everything adds up. Thank you so much for watching. I will see you in the next PPC Ian Dividend Investing video.